Hello and welcome to another month of mid-month motivation with mortgage and industry information. Hoping that you are doing well, hoping that your day has been blessed so far. All right, so I'm going to get right into it. So the quote for today is life is not always an elevator. You can't always take the easy way up. Sometimes you have to take the stairs. All right? And when you're taking those stairs, right? Sometimes you got to take a stop, got to take a breath and kind of readjust, reposition. Bottom line is, life it's not always easy. There's always going to be challenges to some degree, okay? There's always going to be some sort of challenge. It's not going to be the easy way up, but you have to understand that, with those challenges, persistence, having the persistence, to just keep moving forward, to keep going, and you will reach the top. All right, it won't be an easy elevator ride, zoop, right up. Okay, as I said, you may have to take the stairs the longer way, but you'll get there. You'll get there, and you got to just keep motivated, keep positive, and keep working towards it. All right. Okay, so let's hop right into mortgage and industry news, and it's no surprise, rates have been the hot topic. All right, rates have gone up quite significantly over the last year, variable rate, fixed rate. And I'll tell you, for individuals that went into, let's say you purchased your property, you had 20% down, or you already had an existing property and you wanted to get some equity out, and the alternate side gave you a little bit more flexibility in terms of qualification to get how much you wanted to get out. You went in at a low rate, whether it be a purchase or, once again, if you had gone into a refinance situation and you went in with a low rate on the alternate side, and you might have went into maybe a 1-year term. All right. So you went in at a 2% and your term has come up to an end or is about to come up to an end, and you received a renewal notice or a renewal offer, and you notice that interest rate has obviously increased drastically from maybe that 2% or that 3% that you initially went into, and now it's 5 or 5.5. And that is going to be quite a drastic increase in the monthly mortgage payment. That's what's happening right now. So once again, individuals may have went to the alternate side because it's a little bit more flexible. Maybe it gave you more access to income, based on, what your debt load was, based on what your income was. The A side is, of course, a little bit more tight on their guidelines, and you may have went to the alternate side, and you're in the situation now where, and once again, alternate side does offer 2-year and a 3-year, but some individuals went into a 1-year, hoping maybe, rates might have gone down a little bit more, or they work their way back to the A side, and that might not have happened, and you're in a situation where that mortgage payment has drastically increased. All right, so not an easy time, and I'll tell you, it doesn't matter too much where you go. There's not a lot of competitive rates out there. For the most part, you have to weigh the pros and the cons out with regards to the fees to go to another lender, the closing costs, all these things. With regards to shifting gears, and once again, there's not a lot of competition out there, competitive rates out there, pretty much across the board. Lenders, they're not too much different in what their interest rates are. All right, and then we have individuals who are in a variable, in the variable rate. And for the variable rate, there's two type of, within this product, there's two type. There is the variable rate mortgage, and then there's the adjustable rate mortgage. So the variable rate mortgage, everything's done on the back end. So if the rate increases, all right, what's going to happen in the back end? It's you're either paying more principal or you're paying more interest, or vice versa, right? Everything is adjusted in the back end. Your monthly mortgage payment remains the same, all right? Then you have the adjustable, and the adjustable, if the Bank of Canada, increases their rate, your mortgage payment is going to increase, and you're going to see that come out of your bank account. It's going to be an increase in payment. If the rate goes down, then it's going to be a lower payment coming out. So it adjusts depending on what the rate is. Now for the variable rate mortgage, there is that trigger point that a lot of clients are coming, they're finding themselves in right now, that trigger point where, the bank may be giving you a call to reset your payment, because yes, you were in a variable rate mortgage where the payment was the same, despite, what the rate was, what the variable rate was. But because the variable rate has been increasing, you find yourself in a situation where you're not paying down any mortgage at all. The amortization kind of, stretches out. So, the banks will start to contact you, to reset that payment, so that you can get some principal paid down on your mortgage. So, of course, these are discussions you're going to have with your bank. But this is what you may be facing right now in this climate. Okay. And once again, as I said, it's really a storm that we are going to have to try to ride out and hope for the best. Bank of Canada's next meeting is going to be October the 26th. And we are estimating, yes, that they are going to increase that rate. It might be by 0.5, it might be by 0.75. At this stage, it's really hard to predict. I mean, everything is so unpredictable right now. But, maybe at worst case, 0.75, they increase it by, hope for, prepare for the worst and, hope for the best, right? Maybe the best case scenario is by 0.5. Worst case, it might be 0.75 again. All right. So just keep an eye out for that. And if you have any questions at all, please feel free to reach out to me. Once again, do not forget the monthly mortgage seminar every first Thursday of the month at 7 p.m. Register for that. Gain all the knowledge that you can. Once again, interest rates are high. But the next thing to note is that values have gone down. And this is a direct impact of the interest rates going up, right? That values have gone down. But it is it's a buyer's market right now, for the most part. And you may go in at a high interest rate, right? But once again, if you can kind of bite the bullet and, ride the storm out with a higher interest rate, and, when rates start to go back down and you renew a mortgage into a lesser term, you might have been able to scoop up a property at a pretty decent, purchase price. Certainly not the type of values that we were having before with the bidding wars and all that type of stuff. We're in, a different market now, and, you have opportunity. This market gives you that opportunity as well to firm up your financing, where hopefully you're not having to waive your financing conditions. I wasn't very favorable to me, not something that I liked at all. We want to be able to make sure that you're able to firm up your financing, because anything can happen, right? Anything can happen. So definitely, once again, right, now's not the time to throw in the towel. When someone's getting the bitter end of the stick, somebody's getting the better end of the stick, and vice versa. All right, remain on course. If you are still looking to purchase a property, remain on course. And when the time is right, you will attain that goal of home ownership. All right. Thank you, and enjoy the rest of the month.